Hello, today is Friday. It is 4:21 p.m. Ugly day in the market. A pretty ugly reversal on Thursday and Friday for that matter. We're going to show you the moves we made, why we made them. I want to be realistic with all trades. Like, this was a tough week, but I need you to understand the things that I did this week made a lot of sense. Okay? So, I understand people are frustrated. This is not easy for anyone. Okay, we're still outpacing, which is good. Again, why is this so important? Why do I always try to make sure I benchmark the S&P 500? Number one, it averages a great return on average. Keyword average, that means some years may be up, some years may be down, but average is like 12 to 14%, and probably even higher over the last 10 years because they've been fantastic. So the thought process is, if we know something that is very efficient long term and we benchmark that and are outpacing, yes, there are going to be bad times. And today was a great example of why trading key levels is important, and I'll show you. Okay, this stuff does work, and it helps outperform. Now you're like, Jonathan, we actually didn't do well. We actually underperformed this week. That is true. I actually was pressing hard, and I'll show you why. I'll show you why I was pressing hard. You can see that I was kind of slowly chipping away at different values, key levels. 45.21 on Tuesday, 45.85 on Wednesday, and on Thursday, on the dip, that looked like we were going to regain 45.58. So this is actually good spread out of trades. It looked like we were going to go higher. We hit a key level, went lower, and said, all right, got to be out. But understand that this is good trading, slowly getting in at different values throughout the day so we don't miss a rally. So on Thursday, let's go to the chart. So on Thursday, obviously, we had CPI in the morning. That morning, the market fell significantly, but regained it all within 30 minutes. Okay? So Thursday candle is right here. We went as low as here. Bottom of this channel, this red candle is what we're looking at right here. And we tested here, tested the key level of 45.90. Ding, ding, ding. 45.90. Headlined in big. If we would have broke that, it would have been huge. So I didn't think we would break it. We retested 45.50. I got in at 45.58, and it actually went positive for most of the day. Then we had a second headline that just tanked it, and it happened so fast that I could not get out in time. It's just the reality. Sometimes that happens. But the worst thing you can do in those situations is panic. You see how price action reacts, okay? So here is Thursday. You can see the huge dip down in the morning. That was not a fun morning. We regained it all, okay? This retested, I believe right in here, the retest of 45.58. I got in. It looked like it was going to go higher. Boom, headline. This happened so fast, could not get out, period. It happened in about 30 seconds, and it was not fun. So then it just kept going lower, period. And so it got to the point where it was skipping levels, 40, let me switch charts, 45.50, and went right through. 45.25 went right through, which was strong support. It had the 20-day moving average, had the 5-day moving average, tested as low as 44, like 80-ish, I believe. Regained some at the close, okay? So it was an ugly day, and you could see that was the day that killed us, because I had added at these levels periodically through those 3 days. It's good trading, good risk reward. The second headline, which we all thought was kind of already in the price, it shouldn't have had a factor, most people thought, Well, it doesn't matter. Price is what wins. So we continued to sell off, and I had to basically make the decision to, unfortunately, hold into the close, which was not fun. So I held Friday, and here's my decision making on Friday. You're like, why did you not sell when it got to here? And I'll show you why. And I was watching it. I sit up all night watching price action. So I was watching this. We tested very, very low overnight, okay? And what I was noticing is this cup here. It was very symmetrical, meaning you cut a line right down the middle. It was looking very symmetrical. And it looked like this could have really been a huge reversal. And so I had to kind of wait to see, could this play out? Because if I would have got out here and this thing ramp up higher, it kills me in performance. So I unfortunately had to wait till here. See this line right here? This is my cutoff point to say, I know that this is not the thing that's going to, this is not the plan. This is not the move that I'm expecting if it goes below there. Okay. So you can see it was trying to cup, and this is the final straw. Once it went below there, right here, 44.78 was my out. And boy, am I glad we did. I mean, this would have been, again, I had more risk on than the S&P 500. So that's how we create alpha, which again, this was the day that killed us because I had a lot on in the S&P 500, over 100%. Not anything crazy risky. It's a good risk reward trade, getting in at different levels. Okay. So this was the day that killed us, period. And today, even though this looks like it's a bad day, and it was a red day, don't get me wrong, had I waited any longer, it would be this times 3. So basically a 6% down day. So thank you for following the key levels. In this environment, you do not want to catch a falling knife, okay? It's one of those situations where it keeps going lower and you don't fight it. If we break 4,400, if we break 4,400 right here, this gets really ugly. We tested it on Friday, bounced. Right now we're trading in between the 44.28 and 44.20, or excuse me, yeah, 44.28 and 4,400. Kind of a right in between close, not anything really to work with. So we did get the bounce off 4,400, as you can see. If this breaks, not good. But we are in cash as of right now. Thankfully, I got out way up here because it broke this line in many technical levels that we knew would be an out. And there is 44.78 right there. There's the level. So the plans work. It's just I had a little more risk on. So again, even though we're all upset on a red day, know that it could have been much worse, and we followed discipline. So today was a protect capital day. The fact that we were only down this much on a tough week, and I actually was taking some good risks, because here's the deal. This right here, okay, this channel, when this broke the 5-day moving average, this was an add hard, and clearly it gapped up. Very similar to right here. It broke the channel, closed above the 5-day moving average, gapped up, and a lot of times this is what happens. So I was pressing very hard, getting in at different levels. And had we not had that headline, I'm convinced it would be no different. The second headline is what just tanked it. Objectively, the 45.90 was a wall. This is kind of the bull bear line that we're going to continue to watch over the coming weeks, because if we get above there, it's going to be a huge rally. So do not get too negative on this market, because there are opportunities. I'm going to keep trading the way I am because it does work. over time, the S&P 500, especially if we beat it, we're going to be in good shape, okay? So hang in there. But I want you to see this. There is opportunity at hand. So do not freak out. Just a day like today, it was nothing but selling later on. So you just get out of the way, wait for things to settle a little bit, have better risk reward. Right now, we're in the middle of nowhere, no real tradable level. So I don't want to get in. So Google down 3.16, Apple down 2.10. Facebook is just getting hammered. I mean, you don't believe me. How about this? I mean, this is, yeah, I didn't even show it full chart. It's way down here. Not good. Way down here. That's an ugly day. And a very, very ugly last couple weeks. Okay, so I think you get the point that this is a very difficult market. This is not 2021. Some things that are doing well that I'm very aware of is oil and gas. I think that move might be a little bit stretched at this point. Another reason why I'm being cautious is the VIX is at around 30. When that happens, watch out because you could see a huge dip for no reason. Again, valuations mean nothing when everybody's selling. We want to look for the strong names when things dip. Sure, all of these are of interest to me at some point in some time. I use a lot of these as kind of what is the market doing in these areas, even if I never trade them. So ARC, not going to trade it, but it's interesting to pay attention to see, are the names with no real financials going to be okay? And they actually started out very green today. Both of these, IWM, the Russell 2000, and ARC, were both green today and then just tanked once that key level broke. So again, the key levels do work. We had a little more risk on, which we should have. The risk reward was there. One headline tanked it like that. And we just kept falling to the downside Friday once that key level broke. So I hope you understand, like, I'm not just guessing at these things. I have reasons. I'm staying up a lot of times all night watching to see the price action, to see if X level breaks, what's going to happen. And so fortunately, I followed through with that plan to say, I need to be patient Friday. I don't like losses. Like, I don't want a 1.5% move, but had we held that level, we would have likely ramped up very, very hard. So hopefully you understand that there's a lot of research that goes behind this. There's a lot of risk reward. The summary is this. I understand accounts are ugly right now. Everybody's like, well, I'm back even the start of last year. Yeah, it's not pretty. That's just an example. Or they're calculating saying, I haven't done well because I took money out, and you get the stories. But the summary is we are beating the index, which is good. I don't like this, but we did take some shots, which we need to do when there is strength. There was a lot of strength in here. Like, these are indexes doing that well. You can see I got in at the end of this day to say, hey, we closed above the 5-day moving average. Let's go. Next day, and then I added here on weakness, and this actually did not work out. It actually at one point was very, very positive, but the headline took it right below here and just tanked. It happened so fast, there was not much to do. And when that happens, you got to be patient to make sure this thing doesn't just come back and rally. So that was an unfortunate day. This was the day that killed me in reality. But I was very, very disciplined on Friday. Nobody likes this, but understand that I got out when this was down 0.5%. So I caught it quite early. I just had more risk on, which made it 1.5%. Okay. So we need to take these shots. We have to take these shots. It's what gives us the outperformance. And I hope you understand that the strategy is working. It's not fun during times like this, but do not lose hope, because these dips will lead to huge rallies eventually. Not sure we're there yet. If we lose 4,400, we have some ways to go down, but I will continue to trade this way, slowly getting in at different levels. That way we have a better shot, especially medium term, to get some really good appreciation. So January, February, March tend to be difficult months, so don't fight it sometimes, okay? That's kind of my mindset, but if we get above 44.50, this thing gets bullish again, okay? So again, 44.50, if I'm showing you the chart, 44.50. If we get back above here, 44.50, this thing ramps. Just the way it works, okay? So I hope this helps. I hope the explanation helps as to why we benchmark the S&P 500. These are not fun times. I understand that. I lost a lot of money this week as well. So it's all my stuff's in the same stuff you're in. So it hits me twice. So I feel it, and overall, we have to stay disciplined. There are opportunities. Even in a down market, if we go below 4,400, it could be a really good short. So we'll see. Thanks for your trust. Thanks, guys. Have a great weekend. We'll be okay. We will be okay. Thanks.